Give me a minute and I will walk you through a simple, rules-based strategy that you can actually trade without guessing. The plan is straightforward. One tool will define the trend. One tool will tell us whether the market has enough participation. One tool will give us the exact entry. I will show you 2 long examples and 1 short example. We will keep a fixed 1 to 2 risk to reward throughout, so the outcomes are easy to compare. If you like to follow along on your own charts, get TradingView ready now. I will speak slowly and clearly so you can match each step on screen. Let us start by putting the tools on the chart. Open TradingView and load any market you prefer. I will demonstrate on Euro USD, 1 hour, but the same rules work on any symbol and any time frame. Open the Indicators window. First, add Twin Range Filter by ColinMck. This will be our entry trigger, so remember, this one is about timing. Next, add Volume by TradingView. We will use it to check participation, so it answers a simple question. Is there enough activity to push price? Finally, add SuperTrend. This one decides direction. If you are setting this up with me, take a second to confirm all 3 are visible. When you are ready, we will lock the settings so each indicator does one clear job. Now we slow down and set the inputs. Start with Twin Range Filter by ColinMck. Open Settings. Go to Inputs. Set Fast Period to 25. Set Fast Range to 1.5. Confirm. From this point on, treat it as a signal engine. When it prints long, we are allowed to buy. When it prints short, we are allowed to sell. But only if the other tools agree. Next, open Volume by TradingView. Go to Style. Enable the Volume Moving Average and set its color to white so it is easy to read. Go to Inputs. Set the moving average length to 10. Confirm. Our rule here is binary. We take trades only when the current volume bar is above the volume moving average. If the bar is below, we stand down. Now set up SuperTrend. Open Settings. Inputs. Change factor to 5. Go to Style and turn off the background plot to keep the chart clean. The logic is simple. When SuperTrend is green and price is trading above it, we call that bullish and we only take long setups. When SuperTrend is red and price is trading below it, we call that bearish and we only take short setups. Before we move on, a quick execution note. We enter on the next candle open after the signal candle closes. We put the stop beyond nearby structure. For longs, below the most recent swing low. For shorts, above the most recent swing high. The profit target is 2 times the initial risk. Here is the checklist we will follow in every example. Step 1. Direction comes from SuperTrend. Step 2. Permission comes from volume being above its moving average. Step 3. Timing comes from Twin Range Filter printing long or short in the same direction as the trend. All 3 conditions must be true at the close of the signal candle. Only then do we act. We place the order at the open of the next candle. We set the stop beyond the nearest meaningful swing. We set the target at 2 times of risk. If any one of those conditions is missing, we do nothing and wait. That is the discipline that keeps this method consistent. Long example 1. Think trend continuation with fuel. SuperTrend is green and price is trading above it. That gives us long-only bias. We look at volume and we see the current bar closing above the volume moving average. That tells us the market has enough participation. Now we wait for Twin Range Filter to print a long signal. It prints. We do not jump early. We let the signal candle close. At the open of the next candle, we enter long. We set the stop below the most recent swing low. Use a clear pivot, not a tiny wick, so normal noise does not stop you out. We set the profit target at 2 times of risk. In many cases, you will see 1 or 2 candles of hesitation, then a push as SuperTrend remains green, and volume continues to hold above its moving average. If the first candle after entry is quiet, that is fine. We are trading the plan, not the tick by tick. Tip: if the long appears but the volume bar is still below the moving average, do not take the trade yet. Wait for a bar to close with volume above the moving average, then take the next qualified long signal. One extra bar of VM patience upgrades the quality of many entries. Long example number 2. Think pullback and release with structure. SuperTrend is still green and price remains above it, so we keep a long-only mindset. Price pulls back toward a minor shelf. Volume softens during the pullback. That is normal. We wait for participation to return. The next bar closes with volume above its moving average, and twin range filter prints a fresh long after the pullback stabilizes. We enter at the next open. The stop goes below the pullback swing low to give the trade room. The target is again 2R. Often, the market will form a small base of 1 to 3 candles and then expand as volume returns. If you feel tempted to tighten the stop early because price is moving slowly, take a breath and remember why the stop is placed beyond structure. Tightening stops too early cuts the winners that pay for the losses. Tip: if the most recent swing low is so close that your stop would be unreasonably tight, skip that signal and wait for the next one that gives you a realistic stop distance. A cramped stop inside noise is an invitation to be stopped out. Short example: think lower high into momentum with a realistic loss path included. The environment flips. SuperTrend turns red and price trades below it, so we switch to short only. A new volume bar closes above the moving average, so permission is granted. Twin range filter prints a short. We let the signal candle close. We enter on the next open. The stop goes above the most recent swing high. The target is 2R. Now 2 things can happen. The market can slide steadily, pause, and continue to target while SuperTrend stays red and volume remains healthy. Or the market can snap back and tag the stop. That second outcome is not a failure. With a 2R target and fixed risk, even a moderate win rate keeps the equity rising. The key is to apply the same rules trade after trade. Tip: if a short appears but there is no clear lower high to place the stop above, give it one more bar to form structure. A logical stop location is part of the edge. A few practical notes so your execution stays consistent. Always act on closed signals. If SuperTrend and twin range filter agree but volume does not, you do nothing. If all 3 agree but the nearest swing would put your stop in a strange place, either too tight or too far, pass and wait for the next aligned signal. The strategy does not require constant action. It requires selective action. Keep position risk fixed, for example 1% per trade. That way, no single trade can damage your confidence. If you work on faster charts like 5-minute or 15-minute, you will see more noise. In those cases, the volume condition becomes even more important. If volume fades under its moving average, stop taking new entries until it returns above.